asks us, which of the following should be shown on a simplified invoice? Okay, so basically we've got a list here and we've just got to decide, should that be shown on the on a simplified VAT invoice or shouldn't it? Now, it just so happens that I found this in the reference material. If you go to point 11.8, and I'll show you where that is. So if you had a set of this sent by me, or if you've managed to download it from the AAT website, oh, that was a good guess. There's actually kind of, let me just check, does it go on there? Yeah. There's quite a little bit of information that it does actually give us on this. So actually this would pure and simply be one of those where you'd be like, well, why do I need to learn this? Because it tells me everything I need in the reference material. So I'm just gonna, no worries, Ryan, thanks for, it's okay, thanks for joining in. So let's just have a read what it says in the reference material. So if a VAT registered business makes taxable supplies of goods or services for £250 or less, including VAT, then it can issue a simplified, or another word for it, a less detailed VAT invoice that only needs to show, firstly, the seller's name and address. So that's the person who's selling it, the supplier, if you like. The seller's VAT registration number, the time of supply, in other words, the tax point, and we're going to look at that later anyway, a description of the goods or service, and the total payable, including VAT. Can I just ask you what's another term for that word, for that line, sorry, the total payable, including VAT? What might it also be called? Yeah. Thank you, Sarah, Ben, Lila. Hi, Lila. I hope you're well. Yeah, that's right, everyone. It is the gross amount. So, yes, they don't give you that terminology in the reference material, but I would imagine you'd know that that's also pretty much known as the gross. Okay, so if the supply includes items at different VAT rates, then each different VAT rate, so for each different VAT rate, the simplified VAT invoice must also show the VAT rate that is applicable to different items. What does it mean by that, VAT rate? What's it talking about? What could there be? What's the normal? Yeah, 5% could be one of them. So 5% is something that is used for like fuel. Like if you've got an electricity bill or a gas bill, they charge everything at 5%. As Ben said, another type of VAT is zero rated. Well done, Amy. Well done, Ben. Good old favourite Sarah, 20%, which is the one that we all kind of have to know. Yeah, if something was exempt, it would probably have to show us, but yeah, I mean, I'm gonna go with that. It's not a type of VAT rate because it's exempt from VAT, but it's under the scope of what we talk about in indirect tax. So you've got your zero rated, your standard rate, which is 20%, and your reduced rate, which is 5%. And then if there's no VAT on it, it's exempt from VAT. Okay. It says here, it also, oh, sorry, I've already read that. And then I think there's a little bit just at the top. There is no requirement for the business making the supply to keep copies of any less detailed invoices it has issued. Right, so we've had a quick work through that. We've had a read through the information that it gives us. And I want to have a look at these questions. So what we're going to do is put a tick in the ones that apply. What I always do, just to make it perfectly clear, really, if this was an exam question, they only want a tick in the boxes that apply, but I'm going to put a cross in the ones that don't apply. So what about name and address of the supplier? Was that something that we would include on a less detailed invoice? So think about it. Imagine that I am the customer and I get in the post a less detailed invoice. If it didn't have the name and the address of the person that was sending it, think about this rationally. How would I know where they were from? Does that make sense, Eve? Yeah? Just think, if a piece of paper or a letter came for you tomorrow in the post and it didn't say who it was from, I wouldn't have a clue. So that's why you would always have the name and the address of the supplier. So you know basically who the letter or the invoice is from. Right. Now, on a normal invoice, oh, you're okay, don't worry. To be honest, I'm quite impressed with myself for that, Ingrid. I just made that up as I was going along. And I thought to myself, how would I know something? If I got a letter tomorrow, how would I know who it was from? I'm actually laughing at myself because I don't always come up with very good examples. Right. On a detailed invoice, in other words, a normal invoice, normally they would have the address of the supplier, and then they would put who it was to. So in other words, the customer or the person that's purchasing it, the purchaser. But when it's a less detailed invoice, do we need to include that, do you know? No, absolutely right, guys. It wasn't on the list. No, we don't need to include the name and the address of the purchaser. So I suppose really, when you get a receipt in a shop, most of the time it's got the name of the business even on just on the little slip in the receipt. So it's going to have that name on, so we know what that receipt relates to. But it doesn't have my name and address on it, does it? And I'm the customer. Okay? Right, what about the tax point? Did it mention that? It most certainly did. Yeah. Right, also a little bit odd, because when I'm teaching indirect tax, I usually am so strict talking about the fact that, you know, when you're doing an invoice, one of the key things that you'd have to have on it would be an invoice number. What do they say with regards to a less detailed invoice though? Does that need to have an invoice number on, do we know? I will just say, and you're absolutely, you guys that are saying no, fantastic work, you're absolutely right. It doesn't have to have one at all. However, do you think the likelihood is, whether it's a detailed or a less detailed, you'd probably have an invoice number no matter what? Because a lot of the time, they're just sort of self-generated, aren't they? Would you agree on that? If you run them off from Sage, for example, it'd normally have an invoice number anyway. Even if you had one of those little triplicate books where you're actually writing invoices out by hand, they normally have like a stamped number on the top anyway. But the rule is, the question is, it really makes no difference that if you got asked in the exam, does it have to have one? No, it doesn't. Right, be careful about this. The VAT registration number of the seller. Right? What does everybody else think? Yeah? Absolutely right. Perfect. And why? Why would it have the VAT registration number of the seller? Why would that be helpful? Why do they have to put that on? Do you actually know the answer to that? What did it say? Well, we haven't got to it yet, but with regards to, because the invoice has VAT on it, exactly, Lila, and it's a legal requirement, exactly, Jacob. Absolutely, Sarah. That's right. It's because, you know, they are selling an invoice, they are providing an invoice that's got VAT on it. Therefore, we need to know that they're VAT registered, because otherwise, could they just be adding 20% on and then putting it in their pocket? So we pay them £120 instead of 100, and that 20 quid, they just pocket it, which is like so naughty. Yeah, does that make sense, guys? Now, I know a lot of people who dilemma over this next one, okay? But I want you to think about it realistically. When I sell something to somebody, does it matter to me whether they're VAT registered or not? Does it make any difference to me when I'm selling to them? It makes absolutely no difference. The only time I really want, you know, the only time it would really make a difference is if I was purchasing from somebody, because I'm going to claim the VAT back. So if I pay £120 and I'm VAT registered, I can get that 20 quid back from the VAT man. But the absolute fact is, and it doesn't matter whether it's a simplified invoice or a full-blown invoice, any invoice, there's no way anybody, I mean, it doesn't mean you're not allowed to do it, but you just would never, as far as I can, although somebody might prove me wrong and say, oh, well, we do it, but I've never seen ever, knowing the VAT registration number of the person that's buying it from me, from my customer. I don't need to know it. Okay, so that is a no. What about the description of the goods or service? Right, before you answer, let me put it this way. So this goes a bit like this one here. Imagine I've bought something, or I owe somebody some money, and they send me an invoice in the post tomorrow. Don't worry, Eve. Don't worry. And they send me an invoice in the post tomorrow, and all it does is say you owe 185 quid. Oh, hang on. So I get this email, this letter tomorrow saying, or even an email, whatever, says you owe £185. I've no idea who this person is, and I've no idea where they got the fact that it was £185 because I don't know what I've bought from this person. What really, for me to, you know, agree to pay somebody some money that I owe them, I really want to know what's included in it. Yeah, I want to know what it is that I'm paying for. Does that make sense? So therefore, for that to be the case, there needs to be some sort of a description of either the goods or service that are being provided. Is everybody happy with that? Yeah, fab. Right, when you're doing a full-blown invoice, what you would normally have, you'd normally have down at the bottom of the invoice, the net figure, the VAT figure, and the gross figure. And that is when you are doing a full invoice. Is that the case for a less detailed invoice or a simplified invoice? Do we need to know this? The charge before VAT, which also has its own name, the net. Do we need to know that? Because weirdly, on a on a simplified invoice, all they want, or all we need, oh, sorry, I'm not doing a great job of my highlighters today, is that's all they say that you've got to include, just the gross. So they don't want the figure before VAT. So that's a definite no-no. What about the total amount payable including VAT that we've already discussed and we know is called the gross? Well, if we're not showing the amount before VAT, we have to show a amount on that invoice, don't we? So surely the best figure to put on that is the total amount that you want to receive from your customer. Okay, absolutely. And then we've just had a big chat about this, so hopefully you'll remember 5 minutes ago. So the VAT rate, if it is different rates that we need to apply. So I think we just talked about, just to give it away a little bit, 0 rated, reduced rate, standard rate. Therefore, if there are different rates, do we have to show it? Yeah, good. Fabulous. Absolutely fabulous. How do you feel about that? Feel okay? And again, let's be honest, there isn't anything on that whole question that I couldn't have just opened up in my exam and looked at that. There was nothing on there that it didn't tell me. It didn't tell me what doesn't have to be included, but what it did say is what needs to be shown. So if what needs to be shown is not on, if there's more than what needs to be shown on that list, then it would have been a cross in the box. Okay, fabulous. Right then, what else have we got? Right, part B. Now, my advice to you guys, and I think you're probably all old hats at doing AAT exams. Well, you tell me, is there anybody on here, anybody in the chat panel who has never yet done an AAT exam? You see what I mean? We're all professionals. We've all seen them, been there, seen it, done it, if you like. Would it be fair then, and I have to be careful what I say here, that at times we sometimes really need to read the questions very carefully because it's not always totally clear straight away what they're asking? Who agrees with that? Yeah? Sorry if you can hear my strange dogs that are absolutely going by me. Let me just shut my bedroom door. I thought life was going too well. So, absolutely correct. Strongly agree. Yeah, I agree with that as well. It's, yes, sometimes they don't always make it very clear. So what I want you to do really, a bit of advice for you, is to make sure that no matter what, you always read the question extremely well, okay? Because sometimes they can sort of try and catch you out a little bit. So, part C, oh, hang on a minute. Where are we? Part B. Oh, I've missed a bit. Oh, hang on a second. Where am I? Oh, no, that's that. I'm here. Sorry, I'm here. Right. So it says here, a business has a mixture of taxable and exempt supplies, so it's a partially exempt trader. Now, I can't remember who the young lady is who mentioned de minimis. Give me a bit of a, remind me which one you are, because this is, I said to you last week. Hi, Amy. Right, are you ready for this? I'm going to look at it with you now. So let's just have a little look at these. So this is a business that trades with taxable and exempt supplies. Okay. So it is all about reading the question and then reading it again and reading it until you understand what it's trying to say. It says, any VAT on purchases which are fully attributable to taxable supplies will be recoverable. In other words, just a normal VAT invoice, 20% or 5% or 0%, whatever it is it fully recoverable? Can we claim it back? What are your thoughts? Can we claim VAT back on purchases? If they fully sell, if all of their goods are taxable, in other words, none of them are exempt. And you are absolutely right. I will just mention one more thing. What do you have to be able to claim that VAT back though? It's not trying to catch you out on that bit, but I'm just double checking. Yeah, that's right. You need to be VAT registered. Correct, guys. Okay, so the answer is this. Right. Okay. So Amy asked me a question about what does de minimis mean. Okay, I think the word de minimis is actually Latin, and I'm coming across as though I sound really intelligent. I actually looked that up once, I believe. So I'm not extremely intelligent when it comes to all that sort of jazz. But it says, any VAT on purchases which are fully attributable to exempt supplies will not be recoverable unless they exceed the de minimis limit. Right. I want you to read that and see if you spot what your thoughts are on it. Really? Have a read of it. Everybody have a look at what Sarah has written. Right. Let me explain. The de minimis limit. Now, I'm going to be honest, I don't know, maybe I should know this, and I don't think it tells me, and I don't think we need to know it. But if you are a business, let's use a dentist. And in your dentist, you sell dentistry work, obviously, because you're a dentist. Dentistry work is exempt, okay? So you're exempt from paying tax on a fill-in. Thank goodness for that, because it's really expensive as it is, but that's another story. But you also, the dentist also sells toothbrushes, which are actually taxable, okay? Now, what you should really do, so Amy, I'm sort of aiming this at you, but hopefully it'll help everybody. What you should really do, you need to look at everything that you sell, and I sometimes think the notes overcomplicate this. You look at what you sell, and you have a box. I'm literally using my hands. My left-hand side is everything I sell that's exempt. My right-hand side is everything I sell that is taxable, okay? If the amount that you sell that's exempt is under a certain amount of money, they'll just let you put it all through as a taxable supply. So let's say 100 quid. I don't know what the figure is, but let's say the de minimis limit is £100. So as what we're saying is, as long as your supplies, whether they are exempt or recoverable, are under the £100, they'll let you claim the VAT back. Does that make sense, Amy? What they'll, let me try and explain it a little bit better than that. So they might say that if you've got, I don't know, let's say you've got £10,000 worth of taxable supplies and you've got a few quid's worth of exempt supplies, because really this year you did more dentistry work and you sold hardly any toothbrushes. They're saying if it's less than a certain amount that's exempt, we'll let you just shove it all through together and deal with it like that. You don't need to you don't need to split them out. But the de minimis limit is just an amount that the HMRC come up with, and if it's below that, you can kind of put them all together. So the key word that a few people have noticed is this. Exceed. Whenever you're talking about the de minimis limit, it's not over the de minimis limit, it should be below. So that must be false. Right, look at what this said. A business has a mixture of taxable and exempt supplies. And then look at this. The business can recover all input VAT. True or false? So Sarah, you think false. Guys, what do we all think? True or false on that one? So Sarah, Ingrid, Lewis, just do me a little favour. Tell me why you think it's false. Right. So what's the word in that you need to notice? Correct, Nathan. Well done. That is the big bad word that we're looking for. They've put all. You can't recover, Abby's saying, you can't recover VAT on exempt supplies unless it's below the de minimis limit. And that question does not say that. It says the business can recover all input VAT. So you can recover all of it if some of the exempt is below the de minimis limit, but that's not the question it's saying, and it's not stating that in the question. So the answer to that is false. Do we all understand that? Are we all happy with that? Yeah? Fab. Brilliant. Well done, everyone. Right. What about this last one then? The business cannot recover any input VAT. She sort of said any in a bit of a weird voice. That's right. Why is it false, Ingrid? Or anyone, why is it false? It is the same again, apart from they can't say you can't recover it all because you can recover the taxable element. So again, the key word that they've used there is that. If it had said the business cannot recover any exempt supplies or VAT and exempt supplies, that'd be true, but that's not what it says. Because and Ingrid has mentioned there straight away. No, you're right. Don't worry, you should see my typing when I'm trying to type very quickly. It's horrendous. Yeah, it's because you can only recover the taxable element, or sorry, the business can recover the taxable element and also can recover, oh, a second, people still joining, but can recover the amount that is below the de minimis limit for the exempt supplies as well. So correct answer, as you all quite rightly said, that is false. Right then, are we okay so far? Yeah? Right, I think it's a bit random that they've just kind of shoved this bit in here because I think that this is quite a big bit. Good, Emery, great. This is the bit that you should have seen in your notes when it deals with tax points. Okay, so I did have a look. Now, I'm always the one who is quite happy to say, you know, these reference material guides are absolutely fantastic, but they're only as good as if you understand what they're trying to say. Now, I had a good look through 10.3. Okay, 10.3 talks about tax point, time of supply, etc., etc. And it does tell you, and it to be fair, to be totally and utterly honest, it explains everything in these bullet points. It's just a bit more complicated. However, you've got to decide if you were able to read that, which we've not really got time to read all that right now, but if we were able to read that, would that answer everything we needed in our exam? I'm not sure. You'd have to decide that. For me, it'd be okay, because obviously it should be, but it's whether you as a student would be able to understand that clearly. And I think you probably would, okay? Whereas if I look at our notes and I just have a quick look, so for you guys that are FI students, if I look at page 55, no, it's not, is it? 55? Yeah, 55. When we talk about tax points, okay, basically something happens. You're trying to decide what period you should put a particular invoice in on the VAT return. And let's say, for example, we're doing our VAT returns quarterly. Let's just say we are. They don't all have to be done quarterly. But let's say the period that we're looking at is from the 1st of the 1st through to the 31st of the 3rd. And then the next one along would be, so this is one company, would be the 1st of the 4th through to April, May, June, 30th of the 6th, and then the 1st of July, August, September, to the 30th of the 9th, and then the 1st of October through to the 31st of December. Right, so these are your quarterly VAT return periods, okay? So what we're trying to find out is if we've got an invoice, do we put it here? Do we put it in here? Do we put it in here? Or do we put it in here? And there are certain rules that need to be followed to decide whereabouts it goes, and it's very, very important for a VAT point, for VAT purposes, that we put it in the correct place. Okay, so we have to follow certain rules. So that's fine, Ben, thanks for letting me know. Yeah, I'll send it tomorrow. I'll let you have the recording tomorrow. Have a lovely evening. Right, okay, so if I look back at my notes, everywhere has got a starting point. So what you've got, you're going to have a point in time that becomes your starting point. And that will be what you will call your tax point date, or will, for want of a better way of explaining it, your basic tax point. Basic just means it's the starting, oh, what have I pressed? That was interesting. Was the starting point. And the place that you would start would be the day that the goods were dispatched, okay? Or the day that a particular service was provided. Okay, so let's say I am teaching you indirect tax online tonight. That would be the day I provided the service. But I'm not going to lie to you guys, 99.9% of the time, it's not usually about the day a service was provided. It's usually the day that the goods were dispatched. So I've got a date and I know what day that those goods were dispatched. Now, I could just use that date, and let's say if that date was the 28th of March, right, I'd put it in this period. Is everybody understanding that so far? So that would be my starting point. Okay, fabulous. So far, if the dispatch date was the 28th of the 3rd, it would go in there. However, that's not necessarily where it's going to end up. That's just for now our starting point. Okay. What we then do, we then have a look to try and find out what we want to end up calling our actual tax point. Okay. And our actual tax point is the date that we use, the actual date that we end up using that dictates, oh, I didn't mean to do that, sorry, which dictates which one we put in, which is really important. Okay, so we've got our starting point, our basic tax point. What we then look at is this. The basic tax point, so that 28th of March, for example, can be overridden if the payment date or the invoice date is earlier. Okay, so if the date that the goods were paid for, or the date that an invoice was raised, or that date on that invoice was earlier than the date it was dispatched, then we would use that, and that would override the dispatch date, and that would be classed as our actual tax point. But unfortunately, there's one more rule. Okay, so let me just go on to the next page. So this here is your starting point, isn't it? Starting point is always going to be your dispatch date. Then you would look and see, has payment been made before the dispatch date, or as the date of the invoice, or is the date of the invoice, sorry, earlier than that dispatch date? If 2 or 3 are before number 1, then either 2 or 3 becomes the actual tax point. One more little thing just to clarify. So the first thing to check is the date of dispatch. I've told you that. That's your starting point. That's your basic tax point. If this dispatch date is the earliest date, so it's earlier than when it was paid, and it's earlier than the date of the invoice, then the only other thing that you have to check is if the invoice date is within 14 days of the basic tax point. So let's do a couple of scenarios. Let me do it up here. Let's say we say that dispatch date or delivery date, so in other words, our basic tax point is the 28th of the 3rd. Payment is made on the 30th of April. That's meant to be a 3. And the invoice date is the 25th of April. So looking at those rules, we start off on the 28th of the 3rd. First thing we check is the payment date or the invoice date earlier than the basic tax point. So pretty obvious, the answer to the first thing is no, because they're both after that date. The second thing we check is does the invoice date, or is the invoice date within 14 days of the basic tax point? Well, I've said that the invoice date is the 25th of April. I've said that the basic tax point is the 28th of the 3rd. So it's not within 14 days. So if that was the case, then what would the actual tax point date be? Yeah, brilliant. It would be the 28th of the 3rd, because we've done all our tests, none of them worked, and it just ends up being the earliest date. Does everybody understand that? Yeah, fab. What if I did this though? Right, basic tax point 28th of March, payment 30th of April, invoice date 4th of April. So number one, your first check is, does the payment date or the invoice date, is it before the basic tax point? Yes or no? No, of course it's not. So at that point, your basic tax point is still your basic tax point. The next thing that you check then, once you've checked that, because that's always the first thing to do, the second thing that you then do is check, is the invoice date within 14 days of the basic tax point? Yes or no? Yeah? Yeah? Brilliant. Therefore, as Ingrid has said there, that overrides everything. Because it's within 14 days, that becomes the actual tax point. Now, I fully understand that this is FI's material. However, I would just say to you, read that, because although there's a lot more to read on it, it kind of does say that. Okay, I mean, you can see there within 14 days, you've definitely got that bit written in. So as long as you understand that, then you don't really need to learn it. Okay? But it's all about, if you felt confident reading that in the exam, would it answer the question? That's what you've got to see. That's what you've got to check. Right. Now, the only other thing that they might do, sometimes they will do a thing where, you know, if you buy, well, I'll tell you what, I don't want to depress anybody. And I know Abby is one person that was affected, and I would imagine 3/4 of the people on here are affected with holidays, dare I even say holidays at the moment, and trying to get money back and things like that. However, you know, I think a lot of us who go abroad, or go anywhere, it don't matter if you're going abroad or not, actually. I don't know why I said that, but I'm just using that because I'm bitter because I'm the person that was going abroad. If you've paid a deposit, what normally happens is you pay a deposit and then you pay the remainder on the date that they tell you to pay it. And that's that, really. What you're going to do, if you have a question that makes it clear that you paid a deposit, you basically do 2 different tax points. Okay, so the first thing you would do is you would look at the deposit and come up with a tax point for it. Then you would look at the remaining amount and you'd come up with a tax point for it. So going back to these rules that I've just gone through here, wherever I just wrote them. Where did I just write them? Oh, above. Where did I just write all that? Maybe I rubbed it out. Okay, maybe I'm just losing the plot. Anyway, sorry guys. Right, okay. So going back to the, oh, I know where I wrote it. I'm being so stupid. Sorry, it's been a long day. I had to find that. No, where did I write it? Oh, guys, I think I'm losing it. I don't know where I've written it unless I've just deleted what I've wrote. Anyway, it doesn't matter. We will not stress. Ah, no. I had to find it. It's one of those, isn't it, where you won't let it go. There, that's where I've just wrote it all down. Okay, so thinking about these rules then, let's have a look at this question. So, date of dispatch is your basic, okay? Then you're looking if the payment date or the invoice date are before the dispatch date. And then after you've done that, you're then looking to see if the invoice date is within 14 days. Right. It says here, a sequence of events has taken place in a VAT-registered business as follows. An order is placed on the 30th of March, X9. A deposit of £5,000 is paid at the time of order. So it was obviously paid on the 30th of March. The goods are dispatched on the 29th of June. The invoice is raised on the 2nd of July. The balance is settled on the 2nd of October. Right. First thing it wants to do is deal with the deposit. So where do we start? Where would the starting point be? What's our first basic tax point? Yeah, 30th of March, because it says the deposit is for 5,000 paid at the same time as the order. So that's the date that so we're only looking at the deposit when we place the order. So really, what's the obvious answer to that one? What must it be? I mean, straight away, irrelevant of anything else. You always deal with the initial deposit first anyway. And you'll trust me, nearly whatever time it says the deposit was paid would normally, or the order was placed, that would normally always be the answer to the deposit part of the question. So, and anyway, irrelevant of that, everything else is months away. You're looking at June, July, or October. Right. So do we all agree that with regards to the deposit, the tax point date that we would go for would be the 30th of March? Are we happy with that? Brilliant. Right. The next thing that we're looking at is the tax point for the balance. What are your thoughts? Are you all right there, Emre? No, yes, no, yes, yes, no. Are we happy? Okay. Right. We're now looking at the balance. So the goods are dispatched on the 29th of June. That's our dispatch date. Is it paid for before that date, or has an invoice been raised before that date? That's our first rule. Yes or no? So if we're looking at the dispatch date of the 29th of June, so that's our basic. Is any of these last two statements, are they before that date? They're not, are they? Okay, so at the moment, we're still looking at our actual as being the 29th of June, but we've got one more check that we've got to check. Has an invoice been received within 14 days of the dispatch date or of the basic tax point date? Yes, Amy, it has. You're absolutely right, because the invoice is raised on the 2nd of July, which is obviously within 14 days. So therefore, do we keep it as the 29th of June, or do we use the tax points of the 2nd of July? What are your thoughts on it? 2nd of July? What does everybody else think? Yeah, you agree? Brilliant. 2nd of July it is. Correct. Well done, everyone. Brilliant. Well done. Excellent. And the only reason that was is nothing was before, and we checked that first. That is the first rule. Always check, was anything before? Was there an invoice dated before the dispatch date? Was there a payment received before? If the answer to that is no, just before you carry on, your last check is, what date was the invoice? And if it's within 14 days of the basic tax point, you then override it and you use that date. So I'm just going to put the invoice was raised within 14 days. Brilliant. Right, guys, what I'm going to do, I'm going to keep you an extra 5 minutes. So if you need to log off, you need to log off. But I just want to very, very, very quickly look at the first part of the next question. Or do I? Let me see. I'm just really worried that I make sure I get all of this done. I feel like yeah, I am going to do it very quick. Very, very quick. Right. Lee runs task 3. Lee runs a hair salon. His taxable supplies for the year amounted to £96,000, excluding VAT. So that's my net figure. Would you all agree on that? The input VAT on purchases for the same period was 4,800. Okay. Now, input VAT is VAT that you can claim back in. Output VAT is VAT that you have to pay out to the VAT man. Okay. Then another part to the question says that Lee uses the flat rate scheme. The relevant percentage for hairdressers is 13%. And that is worked out by taking your total taxable gross amount, okay, and then working out from that 13% of it. What we're trying to work out is we're going to do some numbers, and then we're going to decide yes or no which of these statements are true. Right. First thing I'm going to do is I'm going to look at what would happen if he was not using a special scheme and he was just using a normal standard scheme. Okay, you'll be fine, Amy, don't worry. So first thing we've got a figure of £96,000. Okay, and that excludes VAT. So the first thing I need to do, because I need to get my total taxable amount, I'm going to work out the VAT on that. So if I times that by 20% or add 20% onto it, I will end up with VAT or output VAT even of £19,200. Yeah, add 20% is fine. But if I wanted to find out what my VAT, because I will need that figure in a second, I will need to add them together. But for now, what I'm trying to work out is how much VAT under the normal standard scheme. Sorry, my pen's just gone funny. Just give it a second. There we go. What would the liability be? So output VAT is 9,200. It clearly tells us in the question that the input VAT on purchases was 4,800. So if this was just a normal everyday scheme, we would have a liability. So guys, this would be box 1 would be the output VAT. Box 4 would be the input VAT. And the difference, box 5 basically, will tell us whether we owe them or they owe us. So it's pretty obvious, isn't it, that we're going to owe the VAT man some money. And it just so happens to be £14,400. Are you happy with that bit? To start with. Great. Lovely. If we were then doing the flat rate scheme, so not the standard scheme, the flat rate scheme, what the flat rate scheme does, it takes all of your taxable supplies, all of your sales, if you like, and it adds everything together, including any VAT that you might have. So in other words, it would take the £96,000 and the £19,200. It would add it together. So that's your total taxable supplies. And I think it comes to 115,200. Right? Because Lee is a hairdresser, you don't need to know that hairdressers have to pay 13%. If they want you to do that in the exam, they'll tell you the percentage. What I would then need to work out is, what is 13% of 115,200? Okay. So if I times that by 13%, I get £14,976. So initially, can you tell which would be the best way for Lee to go? What would he be best doing? Would he be best doing the standard scheme or the flat rate scheme? Because both of those figures are liabilities. That's how much he owes the VAT man. Yeah, definitely the standard, because it's the lower of the two, isn't it? So if he does the standard scheme, he'd pay 14,400. Right. So what we need to do, first of all, and this is just because I know what this question is asking, I tend to look at both of those figures and find the difference. So if I've got 14,976 and 14,400, I would have an amount of £576. So because Lee uses the flat rate scheme, it's fair to say that he is worse off by £576. Do you understand that, guys? Yeah, sometimes it's just easier to do the workings before you start looking at the questions, because I now know that Lee is worse off by £576. So if I have a look at the mock exam and it says Lee is better off by £1,920, I have no idea where they've dreamed that figure up from, because I don't want to be seeing any figure for 1,920. The figure I'm looking for is 576. So it's definitely not that. Again, Lee is worse off by £1,920. Well, that's not a figure, because we've done all our hard work and we've got our workings. That's not a figure that I even recognise. So it's definitely not that. Amy, are you okay with this? I think it was Amy who said earlier you didn't like this bit. You're okay, Ingrid, that's great. Right, so Lee pays the same whether he uses the scheme or not. Well, you know what? No, he doesn't, because I spent about 2 minutes of my time doing some workings, and I know he doesn't. You can't possibly, because it's two different amounts. And it literally, if I was doing this in an exam, I just take a couple of minutes on my scrap paper and do these workings. Okay? So that's definitely not the right answer. It can't possibly be. Right. Lee is better off by £576. Well, that £576 is more like it. However, he's not better off, is he? Because he's paying 14,976, whereas he could have been paying 14,400. So actually, he's worse off by £576. So the answer is obviously he's not better off, but he is indeed worse off. Now, I'm doing this because I'm explaining things to you bit by bit. Had you have spent the 3 or 4 minutes to do the workings in the exam like this, okay, you would have gone straight to that question in the exam, you'd have scooted down, and you wouldn't have even, you'd have been like, no, no, can't be that, must be that. It's like an obvious one. Instead of not doing any workings and coming to this one and going, oh, 1,920, where did that come from? We're not interested where it came from. It's not the right figure. So it's an easy one to get rid of. Right, perfect. We'll leave it there, guys. I just wanted to get that out of the way. I wanted to feel like that we were on task 3 at least after 2 weeks. But absolutely fantastic. Right, if